Bitcoin eyes $40,000 as $1 billion in BTC withdrawals suggests bullish mood. Data shows over $1 billion worth of BTC has been withdrawn from exchanges over the past week. The case for a continued rally in Bitcoin to $40,000 and higher by the year-end has strengthened, with centralized exchanges recently witnessing a sizable exodus of coins. Data by Glassnode shows just over 37,000 BTC, worth $1.4 billion, has been withdrawn from exchanges since November 17 in a sign of investors taking direct custody of their coins. The outflow likely represents a bias for a long-term holding strategy, although some of it could have stemmed from Binance's guilty plea. The bias for holding means strong demand and weakening sell-side pressure in the market amid euphoria from an expected launch of a spot exchange-traded fund in the U.S. Exchange outflows have historically marked local price lows, supporting expectations of a medium-term price rise. BTC traded above the $38,800 mark early Friday, leading to gains in the broader crypto market, with some major tokens jumping as much as 5% in the past 24 hours. Overall market capitalization rose to $1.5 trillion, a level last seen in May 2022, adding some $400 billion since the start of October. Some market watchers say expected rate interest cuts by central banks in the months ahead could generally attract capital to markets, leading to more volatility in speculative markets such as cryptocurrencies. The Federal Reserve has paused its rate hiking cycle and central banks around the world are following, Anthony Russo, head of brokerage at TradeStation, told CoinDesk in an email. It's plausible to believe we have reached the heights of this tightening cycle. For risk assets to get a sustained bid, we will need to see a path forward with lower rates and an end to quantitative tightening. We are potentially entering in 2024 an opportunity for a net positive liquidity for the markets. Bitcoin is a pure reflection of net liquidity in the markets, and we would need to see positive liquidity to support any substantial bullish activity, Russo added. Bitcoin momentum started to rise late Tuesday as Federal Reserve Governor Chris Waller said recent data suggested a slowdown in the economy and continuing moderation in inflation showed current policies were in the right spot. Waller also said that if inflation were to continue to decline, there's a good argument to be made for rate cuts within a few months. Interest rate decisions tend to move markets. Higher rates usually mean risk assets such as stocks and cryptocurrencies take a hit as investors could take profits and invest in bonds. KuCoin ventures to provide $20,000 grant to TON ecosystem. The funding will be allocated to 5 mini-apps focusing on payments and gaming. The investment arm of crypto exchange KuCoin will provide a $20,000 grant to the TON network to fund ongoing initiatives in the ecosystem, a KuCoin spokesperson said by email. The first phase of our partnership involves a $20,000 grant, which will be allocated to 5 TON-based mini-apps, the spokesperson said. Meanwhile, we are in discussion with TON for more collaborations. The mini-apps focus on payments and gaming, according to a Friday announcement. In the statement, KuCoin Ventures said it is aiming to blaze a trail for the future of collaboration between exchanges and public chains. The news may be a further signal of growing momentum around Web3 developments on TON, coming only days after Animoca Brands made an undisclosed investment in the system, becoming the network's largest validator in doing so. Terraform Labs, Do Kwon fail to have Singapore class action suit rejected, report. The suit was filed in September 2022 by Julian Moreno Beltran and Douglas Gahn on behalf of 375 others, who claim they lost a combined $57 million. Terraform Labs and its founder, Do Kwon, may be hit with a class action lawsuit in Singapore after the High Court dismissed an attempt to have it thrown out, Business Times reported on Thursday. Terraform lawyers tried to shift the action to an arbitration process, citing the website's terms of use, according to the Business Times. The lawyers claimed users had foregone the right to trial and to join a class action suit. The court ruled otherwise. To our knowledge, this is the furthest a class action suit has progressed in the world, Mahesh Rai, a director of Drew and Napier, which represents the claimants, said in an interview. Now we are approaching discovery stage. The suit was filed in September 2022 by Julian Moreno Beltran and Douglas Gahn on behalf of 375 others, who claim they lost a combined $57 million. The claimants are alleging fraudulent misrepresentation by Terraform Labs, Do Kwon and his co-founders in their promotion of the algorithmic stablecoin TerraUSD, which led them to purchase and stake the tokens and hold on to them as UST lost its peg to the US dollar in May 2022 and plunged to less than 10 cents. Terraform also faces charges of fraud in the US brought by the Securities and Exchange Commission, which alleges it was selling unregistered securities. In October, Terraform asked for this case to be dismissed on the grounds that the regulator had been unable to make its case. The company did not immediately respond to CoinDesk's request for further comment. Cathie Wood's ARK Invest offloads a further $4.7 million worth of Coinbase shares. Coin reached its highest level since April 2022 on Monday and remains at 19-month highs. Cathie Wood's investment management firm ARK Invest has made its third sale of Coinbase stock this week, dropping 37,377 shares worth almost $4.7 million at Thursday's closing price. Along with sales on November 27 and November 29, ARK has sold around $15 million worth of Coin shares this week from its next-generation Internet ETF. The crypto exchange's Nasdaq-listed shares reached their highest level since April 2022 at the start of the week, touching $119.77 on Monday. They fell 2.43% on Thursday to close at $124.72, but nonetheless remain at 19-month highs. It is a frequent play of ARK Invest to accumulate crypto-related shares when they have seen a downward trend and then offload them when they turn bullish to bank some profits. North Korean hackers Lazarus Group stolen $3 billion in cryptocurrency. The hacker group stole the funds over the last 6 years, which was likely used to fund the country's projects, a report said. North Korea-linked hacker organization Lazarus Group has stolen $3 billion in cryptocurrency over the past 6 years, according to a report by cybersecurity firm Recorded Future. The report released on Thursday reveals that in 2022 alone, the group plundered $1.7 billion in cryptocurrency, likely to fund North Korean projects. Blockchain data analysis firm Chainalysis indicates that out of this total, $1.1 billion was stolen from decentralized finance platforms. A September report published by the U.S. Department of Homeland Security as part of its Analytic Exchange program also highlighted Lazarus's exploitation of DeFi protocols. The U.S. Treasury Department introduced new sanctions against North Korea's cyber activities, adding Sinbad to the Office of Foreign Assets Control's specially designated sanctions list. Sinbad has been implicated in laundering the cryptocurrencies stolen by the Lazarus Group. The group is known to have used Sinbad's mixer services to hide the origins of the stolen funds. Such mixers obscure individual transaction trails by blending multiple users' transactions. Lazarus Group's specialty is fund theft. In 2016, they hacked the Bangladesh Central Bank, stealing $81 million. In 2018, they hacked the Japanese cryptocurrency exchange Coincheck, diverting $530 million, and attacked the Central Bank of Malaysia, stealing $390 million. That's all. Subscribe to the channel and see you soon.